Welcome to Bears in Exile. Today is Thursday, March the 28th, and this is a quick hit on the indexes. Starting off with the Dow, and we got some of what we were looking for. We did not get a blow-off top, but we did get a new high, and all of the news outlets got to say that markets were closing at all-time highs. What do we have beyond that? Well, let's take a look. So, new high, positive. The Bollinger Bands clinched, and now it appears to be going up, which at first glance you would say, oh, this is going to just rip to the upside, and maybe it will, but I do think that we are going to have a pullback soon. Beyond that, the stochastics are pretty darn high with negative divergence, thanks to today. We have the CCI really pretty darn high with negative divergence. We have the RSI going down with negative divergence. We have the MACD going sideways and the MACD histogram slightly ticking up. It looks pretty precarious to me, indicator-wise, but it is not, some huge green candle that, closes above the upper Bollinger Band and looks all crazy. I was hoping for that. I did not get that. There is the possibility that it has a little more to go, as evidenced by the 14-day RSI moving average, stochastics, and doubtfully CCI. I guess I should look at this 60-minute just to see what that looks like, see if there is more in store before it can go down. And here we are, nice move essentially all day long. And we have the 14-day RSI moving average now turning down. The stochastics are relatively high, the CCI is relatively high. The RSI is starting to nudge down, the MACD histogram is essentially going sideways, the MACD is still up. And we have negative divergence on the MACD histogram and the stochastics, and I guess you could say the RSI as well. Anyways, it could look better for the bears here with higher values, but it's semi-decent. It still could go up a little more, but I guess not quite as clear as I would have hoped for. Going on to SPX, most of it is the same as the Dow, although we do have a much nicer candle, and this was the one that the news outlets really wanted to be able to say, oh, close at all-time highs, blah blah blah. This one does have more room to move in the 14-day RSI moving average, although its angle isn't that great. The stochastics are high, the CCI is high, the RSI is going down, the MACD sideways, the MACD histogram up, essentially the same as the Dow, with a few minor differences. The negative divergence on the CCI that's very evident on the Dow is not here, thanks to today. Going on to the VIX. And the VIX was not wonderful last night at all. We weren't overly impressed by it. The 14-day RSI moving average continues to go down along with the stochastics, CCI, MACD, histogram, and even the MACD itself. RSI going sideways. We ended with another spinning top. It did not exceed these previous lows, so they are still ascending, which may or may not be able to catch it. We still have an open gap below us. But this doesn't look overly poor. I definitely could see this move up again to fight it out with the long-term moving average bar, this time guessing that it would do even less than this time. But we'll see. I actually have some hope for the VIX at this moment. I might be early, but I guess we'll see come Monday. 3-day weekend. I mean, there's all kinds of time for European news to come out, so I guess we'll see. And TNA to round off the evening. Totally different story on small caps. Did not have a strong day. It did not exceed or pierce previous highs. 14-day RSI moving average, stochastic, CCI up, MACD histogram, and RSI down. This is a bad sign. So giving hope to the bears. And I guess I'll take a quick look at volume as well just to see if it's changed. We do that every night. And what do we have? We have no real change. Accumulation distribution is still up, but now we are slanting down on the volume weighted MACD, and we're slanting down on the unbalanced volume. That one could be a whipsaw. No real serious danger evident in the dual volume flow. So kind of just chopping here, but there is a little bit of progress towards running out of space and turning some more reds. But 4 green still, 1 red, and I'll look at SPY as well. Here we are with SPY, the ETF for SPX. And notice there's a difference here as well. This did not close at all-time highs. This it did pierce the high from this previous high, but did not close above it. We did get a new red today in the volume-weighted MACD, which is a minor. The accumulation distribution is still pointing up, so we have 2 reds, 3 greens, and the unbalanced volume is not slanting down yet either. So minor development, could be a whipsaw, but candle and placement of candle slightly different as well. And that's it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption time purposes only. Thank you.